Welcome to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors. Today we are talking with Julian Khursigara, who is the CEO of the buyer's agency business Search Party Property, who buy property all around Australia. We start off by chatting to Julian about the state of the investment property market at the moment. Of course, looking into 2025, but what's actually changed? Is it possible to buy property without a buyer's agent in some of these hot markets where these deals are happening very, very quickly? We also talked to him about the prevalence of buyer's agents in the market and the things to watch out there and how to make sure as a consumer you are protecting yourself. We talk about some of the options and data and science that's available to property investors with many of these platforms, and he gives us some insights into deals versus the property that you need for your portfolio and your risk appetite and that suits your income, the amount of yield that you need and how that actually fits within your overall strategy. There's that and a lot more. Julian shares some awesome wisdom with us and I'm sure you're going to take something from it. Anyway, here's Julian. Julian Khursigara, thanks for joining me on Geared for Growth.
Thanks, Mike. Good to be on, finally.
Well, exactly. It's long overdue. This is your first go on the show. However, we've had Luke from Search Party Property that you've sort of taken over from in the past. So it's a continuation of sorts, but it's nice to have a fresh face.
Yeah, no, it's right. We've been 2018 the company started, so we have been around and seen the industry grow in a big way. So yeah, it's we've and obviously as using your services, your company services as a big partner of ours as well. So it's good to finally have a chat to you on screen.
Yeah, well, thank you for the big plug there. Checks in the mail. For people that haven't come across yourself before, Julian, give us a little bit of a background into you and your sort of interest and well, I suppose say it would be a dedication to property, perhaps an obsession.
Yeah, well, I guess I was actually thinking about this the other day. I think my dedication probably kicked in. So, I bought a couple of properties when I was, my first property at, 28, 29, something like that. I was just recently single after a long relationship, so I thought it was the classical guy in a nice tight suit and loafers, and bought a high rise in Sydney, in Newtown, which is a pretty cool area when you're in your 20s, and thought this is going to be a good place to be a single guy, but I never got to live there because I met a lady who now is my wife, so I never got to enjoy that singledom for as long as I'd hoped. But it all worked out well. But that property didn't work out that well because it was a high-rise apartment and had the usual high strata cost. Didn't make any money for like 6-7 years. So it's a classical lesson, I guess, you learn, which I'm glad I learned right at the beginning. Puts me in really good stead now for my clients. And then, you get married, you have your family home, and then you start buying a couple of things here and there, as we both had good corporate jobs, so we're able to afford some properties. And then probably the changing point, actually, Mike, that's when you said obsession, was lost a lot of money in the GFC.
Right.
A
what
lot.
Were you exposed to there? Was that equities?
Commercial industry property funds.
Right, okay.
So basically that whole business and we were overseas, long story short, we went overseas as expats to set up a company for the employers we worked for in Australia, and we're there for a little while, and they rang and the bank rang and said, hey, we're chasing you guys for money. I was like, well, what's happened? They said, your funds totally crashed. I'm like, okay, that's fine, but it was a managed fund as well. So we owed them a lot of money to close that fund. So that didn't cause divorce, but it did compromise. My wife was like, that's it, we're not doing that again because that was your idea. So property became that's how property became the obsession. So when we got back to Australia, we went pretty hard on property and built our portfolio that way. I guess my ultimate goal was always options. I knew I wanted to be an entrepreneur. I knew I always had that in my blood, and tried very little things here and there, and always had lots of ideas, and worked for really great entrepreneurs in my corporate world, which was a great grounding for me. But then I guess as property got into my blood a bit more and read a lot of books and, the usual thing, podcasts and seminars. But as you know, coming through the property market, the seminars back in the day, they were just spruikers. Run to the back of the room, put your hand up on the wall and grab your apartment because we're going to give you a $10,000 cash back. So it wasn't the greatest education as we've got today. We've got lots of great buyers agents and books and media to help us make the right decisions.
Well, that's a good segue into a question that I had about the market such as it is today. Unless you've not had your head in the sand, you would know that there's quite a lot of buyers agents that are active. And I think the percentage of transactions that buyers agents look after compared to, say, 10 years ago is probably 50x, and it still seems to be growing. I'm just kind of wondering, we're here in the beginning of 2025. There's a few markets that are emerging, there's a few hot ones, and many of those I'm hearing from people that saying, take, for example, a location like Perth or Townsville. I'm hearing people saying, good luck trying to buy something if you don't have a buyer's agent, just because of the heat of the market. And I suppose buyer's agents that are dealing with volume are on a first name basis with these real estate agents. They know how they transact. They know they've probably got a client on the hook for an upfront, so there's a real incentive to have that deal done. They're not going to be tire kickers. How do you think the sort of marketplace has changed when it comes to buying investment properties in Australia? And do you see some of those issues where it all becomes about those connections based around the volume in those hot markets?
Yeah, it certainly has changed. I mean, 2018 when we kicked off, kind of I think knew most of the buyers agents by name, not by person, but you knew the big boys who are still around and doing well, and some of those have been around for 10 years at that time. And then a COVID kicked in, and there was a big course provider that was a face-to-face, doing a BA course face-to-face, and then it went online, and that just blew it out of the water because I think we had all these people at home working for the big corporates and banks who had not a lot of work on their plate, so they all decided to do a buyer's agent course, and I think that really pushed hundreds and hundreds. I think I'm not sure the numbers, but we know it's huge numbers into the market. Most of them part-time still, and that's always an issue as well. Sometimes around people's integrity of their full-time job, but also how much time are they putting in for their client who are paying them a lot of money. You can't buy property at night, is what I always say. You can't view a property at night. You can't talk to an agent at night. You have to do it during your day. So if you're working part-time, it's a bit trickier to do that. But yeah, I guess we've seen the marketing change, right? So you go back to 2018, there was, the marketing with Facebook was videos, and Luke was very big on that. He did daily videos and updates. And as you know, we did our, crack a deal of the day, and every day we sent out a deal and talked about deals, and probably were the early adopters of that. But then, I mean, a lot of smart, younger, I guess, BAs came into the market with really great aptitude for social media, and just became YouTube stars and Facebook stars, and they built these big following in groups where they'd probably haven't even bought a property yet or even viewed a property outside of their home or studio, but that really helped grow the market. And and there's some great players in the market, which is excellent, because I think, for me, the bigger the pie gets, the better, because we're all going to win. We just need to, I guess, eventually have some form of, because there's still no regulation, formal regulations. You and I were talking about, the various groups like PIPA and REBA and what they're trying to do, but that's not, even in the real estate course, there's still no buyer's agency, so to speak, course in that license.
Yeah, and take New South Wales, for example. The Department of Fair Trading is the one that kind of oversees it, but they're also overseeing plumbers and tattoo artists, and I don't know what real estate has in common with them. And if you're talking about transaction, the value, I don't have any tattoos, but I'm sure that they're cheaper to buy than houses are, right? The potential for harm is much higher in real estate, right? Because we're talking big biscuits, right? These are things that can affect that person's financial future for life, right? Do you believe there needs to be more oversight, especially when we're having quite a lot of new entrants into the market?
Yeah, like you think there has to be some, and that happens in any market, right? When a new market grows fast, and it's only been a few years to see these BAs come into the market in only the last few years. So we're talking, COVID 2019, really 2020, and only 4 years down the track, and to see that growth. And it takes the government a while to catch up, and like you was, we know you can do a course now in say another state, get a license there over a weekend, and then go and get your licenses in Queensland and New South Wales and Victoria. that's a danger because,
Yeah.
as you know, if you do it properly, let's say in New South Wales, you have to work under a fully licensed real estate agent for a year.
Yeah.
So that's probably one loophole, because it is a loophole. It's not illegal; it's just a loophole.
Yeah.
If you can get your license quicker, you can get into the market and start selling property to people.
Yeah, that is a little bit of a worry. But would you say that it is reasonable for an individual that can do their own research to transact in those hot markets, or do you actually kind of think it's very, very difficult for an individual? I mean, obviously, I'm biased to the value that buyers agents bring to a transaction. Of course, the good ones. I think I've said that a number of times before, but I'm just kind of wondering if the marketplace has changed where, especially in those hot markets, it's a requirement really to have a BA to be able to get a quality deal.
Yeah, I mean, it still can be done. Like, there's no reason why someone who has the time and the patience, because it's not that easy that you can just grab the first deal you see.
Mm,
And are you going to trust, no disrespect to a selling agent, but the selling agent to do your inspections,
hmm
or a junior property manager?
Yeah.
And you're, like you said, you're buying a $700,000 property.
Mm,
And that's, you're putting all your trust into those two people. That's where the independence for me lies, and having someone independent in that transaction. And talking about Perth, and we've got two full-time people, but particularly one full-time buyer's agent. She has 15 years experience of buying in Perth. Like, that's her
right.
mark. She lives there, buys there. Probably a big expense to me. Very few buyer's agents have people on the ground
Mm,
in areas. We do. But even she found it difficult, because what was happening with her, she knew what things are worth. There were people just flying in, and were happy to pay extra 20 grand just to get the deal for their client.
mm,
So what happened, the market kept growing. So it made it difficult even for very good and experienced buyers agents who were trying to stick to the price and negotiate really hard for their client, because some, BAs, or even probably not even BAs, probably just Joe Public from the East Coast, just happy to pay an extra 20 grand because they just want to get in the market and buy something
mm.
when it's really hot, because we did see it was growing, double digits month by month for a little while
Yeah.
there.
Yeah, absolutely. And I mean, yeah, incredible to do 19% in 2024. Um, I want to ask you a question. We were sort of talking off air about, one of your points of difference is considering the needs of the investor and how the property suits those needs. So, for example, if you are buying your first investment property, there'd be a typical type of first investment property that someone would buy. Of course, it depends on what their salary is and their need for yield and those sorts of things. But of course, as you progress into your second, third, fourth, fifth, 10th property, it's going to be a balance based on, well, what do you already own, and what's the drag factor? Well, I'm hitting serviceability issues, so we might need a little bit more cash, or I'm quite positive and I really want to roll the dice on something that's going to post some big capital growth numbers. That's maybe a different type of property. Now, that's something that I know that you do, but in the same sort of breath, you have those cracker deals that you're sending out, which is basically, this is a property, this is a live deal, and you can get in touch with us if you're interested in that. So I'm wondering how those kind of two parts of the business sort of interplay.
Yeah, probably get asked that a bit, and it probably causes some confusion because a lot of people react to those cracker deals, which is the brand. And it's just something legacy. Again, 2018, we started that brand, cracker deals, and it's continued on. And I don't think I've seen anyone else do it, not to the extent that we do, where we give, talk about where we're buying or how we're buying. Even when we do our done deals, which are the deals that we've sold, we give full addresses.
Mm,
I don't think I've seen anyone do that, because I guess for us it's about transparency. When I don't feel like we're reinventing the wheel here, we like people, if they can see, well, we're buying in these areas. Not that I'm worried that they're going to go and buy in these areas because we're buying there. It's for me, if we can share our knowledge, it reciprocates. It comes back around because people know that you obviously understand what you're doing. You share a lot of free data. We do free reports and hot spots and warm spots and
mm,
emerging spots, and we're giving all that away. That would seem crazy to some, but there's only a couple of buyers agents that I can think of that even share anything like that to
mm,
the market for free. But that really, the analogy or the thought factor there is, we have we're quite boutique. We're not doing 60 deals or 80 deals a month. And so across the client base, if there's a deal that we think is solid, it's a great deal, but it just doesn't fit any of those clients who have all a little bit different budgets, risk profiles, preferences, cash flow requirements, all those different things that we look at. We think it's still a great deal. Let's put it out there to community and see if there's anyone up there. So they haven't engaged our services, but they're in our broad either email community or also just through social media. And quite often, I guess it's a reverse marketing. People put their hand up, say, "Hey, I'd like that. Can you send me the address?" Like, "Oh, I can't send you the address because the deal's on the market sometimes." But if you want to engage our services, let me talk you through it and tell you a little bit more about the deal. And if they want to come on board, then we're happy to get it for them.
Yeah, that makes sense. How important do you think it is to consider the trajectory of the individual or the asset holdings that they have when you are looking at a property that fits for them? Because I think when you hear about property investing, I've always kind of said it seems to be hotspot driven, not necessarily strategy driven. It's like, well, where's the next boom location, rather than, okay, well, I'm looking for my third property. What does that property got to look like to help me get to where I actually want to be? And I don't know how many people are actually 100% clear on the actual end goal. So it sort of begs the question, well, how do you fit the puzzle pieces to get there when you don't actually know what the picture looks like? What are your thoughts on that?
No, it's a good question. I think there's no exact science to that, but again, what we do is look at the client, spend a lot of time once they engage our services, look at their strategy, create their buying brief, look at what they're trying to achieve, and it's almost building out that goal and working backwards, like you would in a business with KPIs and targets and goals. What's come about again over the last few years is some great software, game plans. There's another one called Prop Portfolios out there now. You've still got Jan Summers PIA still floating around as well out there. And, so there's some great tools that we can use to help show clients how we can reach those targets. So if it's $100,000 incremental revenue or earnings, at retirement, how do we get there? And it's not about, you never hear us talk about, 10 properties in 10 years. And it's a great book title, but it's not really reality that you require. For us, I'd rather have someone get 3 or 4 very good properties that are going to work for them to get them to that end goal. Not maybe great for my business, but it's about achieving the right thing for the client.
Yeah, well, I suppose if you're client focused, then that's what matters. You're not trying to post those big volumes, as you say. At the beginning of 2025, there's going to be a lot of people that are interested in, I'm seeing it on the forums, like, what's the next Perth? Like, Perth has certainly set the benchmark for a boom market. And it's 2024 across the board, we're only 4.9% increase in the national market average. But you take Brisbane, Adelaide, and Perth, and those were mega boom markets in 2024. Where do your sort of eyeballs look across the country for the next 12 months? And, what is the inquiry like? Are there people still wanting to buy in Brisbane, Adelaide, and Perth, or are they kind of thinking that that's had its time in the sun and we're looking for markets in the doldrums like Melbourne, for example? The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
In the doldrums. Yeah, it's a good question because we do. It's interesting what people ask for. Like you said, what do you see in the chat forums and things like that? And a lot of those chat forums as well sometimes are loaded by potentially, the questions that are posed anonymously could be potentially written by the owners of those chat forums
to a couple of
to get
about that.
to get that, because obviously they get first right to reply, right? Because they control the flow. So yeah, that can control where people are looking at. But we don't hear people talking about Adelaide anymore. Brisbane is still there. Now there's a lot of talk about the Olympics is coming. Now we'll always cut that out quickly and say, look, the Olympics is for 1 month, for example. It's a great party, but it's the infrastructure that Olympics bring, not the Olympic Games. We don't even talk about the Olympics Games. It's about the infrastructure that's coming into Brisbane and all the roads and railways and jobs. And so that's more important rather than that one event. So yeah, I guess since that hotspot as a key term, and obviously you hear a lot of marketing around secret hotspots and things like that as well over our Facebook commercials. And so we're probably looking more that emerging, where can we go next? And again, it's depending on the budget. And as we said, the average investor loans, around 550.
Mm.
So we were buying everything in Perth at 550 when we got in
Yeah.
there in 2021. Nothing exists in it for a house anymore.
Mm.
We were buying that price also in Brisbane in 2018.
Mm.
Um, and so it's trying to get into these markets now. That affordable property, if that is the average loan, depending on what people put on top with cash, on top of that, even if it's 700, so Brisbane is still an area we are buying heavily in. That's where we're probably best known, and obviously, Central Queensland, North Queensland, some of those areas you referred to. We are focused on Melbourne. We do have great confidence in where that's moving to in the future. I don't think it's going to be I'm not using the word boom or even emerging for that right now, or hot market, but I feel the fundamentals of that city and that state are strong. I don't think it's the most livable city, but anyway, we can debate that. But in terms of the investment, we are buying there, and we do see some pockets that we are focused on in areas, and it gives us the opportunity to do some what we call X factor deals. So we can buy something subdivision, granny flats, clients who have a little bit of a different view as well. So obviously you have and that's where I talked about that risk profile, and because that's not an easy thing for a first-time investor to think about, to buy a house and hold on to it for a while, which may mean their yield is going to be lower because they've got a bigger
Mm.
block of land potentially, and but they've got potentially an X factor in 5 or 10 years' time.
Mm. Yes, and I think that's a market where there are still opportunities to be a little bit more creative. Whereas if you're wanting to buy in some of these hot markets, I mean, it's just like, this is the deal, take it or leave it, right?
Yeah, take it or leave it, or they don't even give you a price, right? Like in Perth, now they've gone backwards. All of a sudden, the phone's ringing again from Perth agents. But when it was
Interesting.
hot, they just it's to kind of make a lot of money as quickly as they can,
Mm.
and then the market will kind of balance out and go back to some sort of normality. We saw that in Brisbane as well, right, Mike? You'd see it with your business because you then get the phone call to come and do
Yes.
the schedule. So we see these markets grow and come and go as well. But it's really about that longer term growth. And some clients do have that view. And I know I hear buyers agents talk about it often, where they work on a model of quickly make money quickly, 3-4 years, sell,
Yep.
take that money, and then put money elsewhere and move around. And that's great. It is a good strategy, but it doesn't work for everyone.
Mm.
So
Yeah,
for
absolutely.
for me to say that's what everyone has to do who comes into our business, that's not what we do, because everyone has a little bit of a different profile.
Mm, yeah, no, absolutely, and I think it's worthwhile investors thinking about, well, what would their profile look like? What are their actual needs? And yeah, doing the research or doing the homework, I should say, to say, here's where I actually want to be in X amount of years. We talked a little bit about how the market's kind of changed with buyers agents, the purchasing power that sort of lives within some of these Facebook communities, when we can have, 60, 70, 80,000 people all kind of on the same page of, this is a market that has legs. It's incredible to witness that change. I think in some respects we're also seeing the boom of AI and data science in and around property markets, with a number of different platforms available that kind of has, in my view, sort of democratized property investment data to the masses. How do you see that changing the game? And I'm presuming that you're working with a lot of clients who are plugged in or have subscriptions to that sort of stuff. So the conversations must be quite different with that availability of data.
Yeah, it is. It is interesting, and it's been a great evolution of our sector, going back to what's happened since 2018 to now, and that's been a big change. They didn't exist.
Mm.
We had dear old CoreLogic and RP Data and a couple of the other smaller software programs at that stage. We had to troll through ABS, the census reports, and then each state government produced reports. That's how we got our information and data. Now we can press a few buttons. Yeah, it takes a while to set up the formulas and things like that and get that, the suburbs trends of the world, the H tags, as you
Yep.
mentioned, DSRs, these guys. And a lot of clients are plugging into that community as well and subscribing to that and trying to learn how to do that. But so for us, it's probably just having that, you know, being part of those communities, getting trained. We have an economist, Nathan, in our business, which is again a luxury for us to be able to have someone of that capacity to help us drill deep and interrogate a lot of that data as well, and help steer the ship in certain ways. So when I'm saying, hey, there's a few things looking good over in Perth in 2021, let me go over there for a week and have a look around. That data will determine why we're going to move into different areas. But the software has been a big change. And what I find is so some people, yes, will use it for themselves, and then they just want to buy their own property. They don't want to use a buyer's agent. And that's great. Others will say, okay, we're educated. We know what's going on. Can you help us now go and buy it? Because we don't want to travel to Perth or Melbourne or wherever it might be to look at it. And how do we know it's a good deal? They still want that expert, I guess, commentary and deeper due diligence on the property. So to find a combination, and we often call it an educational process. Even when a client comes on board, we share all our data with them. We take them through the H tags of the world and run through formulas and analogies with them, and try to show the different types of areas that we could buy in, as opposed to saying you stay away from that. Just whatever I say you do because I'm the expert. So we try to educate them along the way. Now some clients are not interested. Julian, just get the deal and we'll be on. Other clients really want to know and really want to see the data and the detail.
So given that we now know you have an economist on deck, and obviously you're someone that's keenly focused on property markets, as much crystal ball as people are ever happy for me to ask a question around 2025, obviously I haven't actually checked the CPI inflation print, but what are your expectations in and around interest rates and the broader economy and all of those levers that shift markets in 2025? What's got your attention?
Yeah, I mean, we can read whatever and believe whatever we see on the press, and a lot of that, as you know, is PR and pushed by the bank's PR, for example, rather than the real economists making those calls. And none of us know if it's truly an independent process. Only the RBA know what's going to happen. But being an election year, I think there might be some favoritism shown towards making everyone happier. And if it really is in all seriousness about the inflation rates and the balance of cash in the market. And I would say I don't think it's going to happen. There's people putting money on happening in February. I think within that second, I'd probably more put my money on in that second quarter of the year to see some small reduction. But with that, we're seeing the confidence in the market is back. Yes, there's there's a lot of talk about tight economies and cash flows, and governments are now, with an election year, there's going to be a lot of handouts coming through. No doubt our industry will be on the top of the headlines again, as we always do when elections come through, and that could potentially pause people, because if there's going to be a change of policy, what do we do something now, or do we wait? So that could slow us down as well. But the year started really fast. January's been really busy for us, which I think is comes out the back, a lot of barbecue talk at the Christmas table while the turkey's getting cut. It's like, oh, I bought a property this year. Oh, maybe I should do that as well. And so people start setting their New Year resolutions, whatever it might be. So we see a lot of people coming in and in the beginning of the year. But I see that happening. I think the confidence is still in the marketplace. People are still positive about, job market seems pretty stable. There was particularly in a few tech sectors that I have friends or family in around the tech industry, there was a little bit of ripple there last year when the US market, there was a lot of culling of jobs in those big sort of billion-dollar companies, and so that ripples through to Australia as well. But seems to be a pretty stable job market, and I'm pretty pumped with this year. I think it's going to be a very positive year. And in terms of the markets, I think the challenge is going to actually be for a lot of buyers agents is finding the right markets for their clients with that smaller, lower budget.
Yeah, that's a good point. If you look at, say, our data across 2024, the average spend was $650,000. Now, if you go back to, say, the beginning of 2023, you could point at 4 or 5 different capital cities sort of in and around that from an median price point of view. But it begs the question now, yes, we might get an interest rate cut. It's unlikely to be 50 or 100 basis points. It's going to be very minimal. So it's not going to expand our capacity so much. But if you are spending 650K, it does beg the question, well, where do you go? Is this a year for some of those sketchier, perhaps a bit more volatile markets like Darwin, like Hobart, that's had a big run in the past? Or is it more about the regions where, even in states like New South Wales, there are regions that have good fundamentals that are in and around that sort of 650 mark? What do you think?
Yeah, I think I'm probably more pro on the regions, or tier two cities, if we want to use a better term that I like to use, because sometimes
Yep.
people think regional is in middle of Australia, somewhere with no water or electricity.
Yeah.
I haven't got on the Darwin bus. There's a lot of chatter around the Darwin bus because, again, trying to get a hotspot quick growth. A lot of buyers they could probably sell, or even individual investors could buy quickly up there with that budget. Our average spend was not far, just a little bit higher than what you just said, Mike. So
Yep.
just under 700, I think it was, for 24. So we're all in that same bucket, so to speak. We don't have that clientele buying blue chip properties. We do buy many $1 million plus properties, but that's just for either owner occupiers, or we've got some clients who are doing some commercial properties and different transactions like that. But that's our 80% or 90% of our clients are the mum and dad investor persona, 35, 45, two kids with a mortgage.
Yep.
And so they generally already have that family home, and they're taking that equity to buy their first investment property and get on the market. Probably the two big trends we saw last year, which I have no doubt will continue. One is, I know it's been talked about for a long time, the rent vestor.
Yep.
And we talked about that a lot, even way back when we started, because Luke was a rent vestor. He had a lot of properties, but he was renting. And so we talked a lot about that word rent vesting. And that's mainly younger people just saying, you know what, I give up. I can't buy in Sydney. I can't live in Bondi or wherever I want to be in a nice area. So we're just going to rent vest. We're going to keep renting and rent. And then they go and buy. And we've seen that already happen with us, a couple of properties in a short period of time, because they generally have good budgets.
Yep.
And so we might end up buying two properties instead of one big one that they, if they have 1.4, 1.5 million, where are they going to buy in Sydney for that if they want to have a house?
Yes. Yeah.
So that's
That's
probably the
interesting.
trend. And I guess self-managed super fund, Mike's probably the second one.
Right.
So we do a
Okay.
lot of buying for self-managed super funds. A lot of that is referral-based business and repeat clientele, but that's been again, if we're a little bit tight over here through our personal finances due to restrictions around borrowing, a lot of, again, that age bracket I mentioned, 35 to 45, have now built, and mainly most of these people are in the corporate world, have built some sizable super funds. So they tend to look to invest with that.
Yeah, interesting. I'm in the middle of a bit of a research project with self-managed super funds and property at the moment. So I'm keen to share that with you once I've done
Yeah,
some
look
data
forward to it.
crunching. So to finish us off for today, Julian, obviously I've sort of prefaced, I mean, we're recording at the back end of January, and I think everyone that's sort of tuning in this time of the year is interested in, what moves to make in 2025, obviously the hotspots in the markets. But I wouldn't mind hearing from you the best advice for property investors this year. And it might not necessarily be about the shiny hotspots and getting sucked into that. But you've obviously been involved in a number of transactions. You've seen a number of clients that have built successful portfolios, have built, financial freedom and intergenerational wealth. What would you sort of give as a tip for investors that are wanting to put themselves in that category?
Yeah, I think one of the bigger ones for us is always, get started when you can, because a lot of people say every day I hear, I'm going to wait till the market slows down or wait for the market to crash, because we do get the odd media outlet who likes to get a few people into the country to talk about how our market's going to crash. So I think, look, if you've got the money, or maybe prepare yourself first. Look at yourself, prepare yourself. It could be reducing credit card debt. It could be looking at your savings. It could be just getting yourself to put yourself in the best position to go and talk to a great broker and get yourself looked at and assessed. And if you've got enough money to get into the property market, then it's time. The next step is to do your research and have a look at what is it you can do, and taking action with that. One of the things we coin a phrase, turning on your tap, TAP. So one is building your team, so your team of experts. accountant, mortgage broker, could be a financial planner, could be someone to help you set up a fund, or are you going to buy in a trust or your personal name? So setting up that team could include obviously a quantity surveyor or a buyer's agent as well. And the second part is taking action. So actually getting your research done, speaking to, decide which way you want to go, whether you do it yourself or through a buyer's agent, and take action. And I guess no doubt the third part is just having patience, because the market does work. We've seen it do it for a very long time, and we've seen all markets move at different stages. There's no one market in Australia. I think the last graph I saw for the 40-year total, it's under 1% difference between the 5 or 6 main cities in Australia.
Isn't that interesting? We get so fixated in the spot to buy, but then you zoom out and you're like, doesn't really matter that
Not much a bit different. And we see, if you look at these graphs, you have 8 years of no growth in Sydney, then 7 years of great growth, 8 years of no growth. So, and that happens across. We've seen, we talk a lot about the Perth, the 10 years of no growth. And then we've had this boom, as you mentioned, and then we've talked about when we started buying in Brisbane in 18, people thought we were crazy. Brisbane hadn't had any growth, I think, for 6 years before then. So it's about trying to find that. And so I think you're right. The second tiers, we're probably not so invested in the Northern Territory at all, and it's not some area we're looking at. But, that sort of, we did quite a bit of work in Bundaberg and these sort of central Queensland areas. Tamworth is an interesting area. It's probably growing now, but I think there's some good fundamentals there. Then there's always been the bigger names that we've heard about, like Townsville and Rockhampton and Mackay, which can get Gladstone, can get into that budget, the average budget you and I talked about. Toowoomba, we're always a big fan of Toowoomba. We've done a lot of property in Toowoomba. So that's where we can do different types of deals as well. Sometimes it's about looking for something with an X factor, Mike, or granny flats and things like that we can look at something different. Central Coast, we bought a lot before COVID, haven't done much since, but again, that's looking very interesting again, sort of where, whether we believe in those property clocks or not, but, it feels like it's coming, it's kind of had its little downturn since that initial boom, because I think more people are heading back into the office. And so that all the people who ran away after COVID thinking I'll never have to go back to a corporate tower, I think there's a slow change in that, but not that they all have to run back. But I think that boom that we saw, a lot of those seaside towns boom after COVID, is probably just reining back a little bit.
Well, 2025, no doubt, plenty of opportunities for investors. And I love the TAP, building the team, taking action and patience. I saw a quote from Rousseau yesterday saying, patience is bitter, but the fruit is sweet. And I think that's probably something that we all need to consider a little bit more when we're investing in property. It really is sort of like a get rich slow scheme if you're doing it, in a low risk way, right?
Yeah, and I think it goes back to the point about what's new in our market. And I guess we've seen a lot of the new entrants into our market. They haven't seen a downturn yet. They've seen the best 10 years of Australian investing climate, the lowest interest rates we've had in history. And then we've had these artificial booms, which, some of them may have happened anyway, but some of them we definitely know were brought upon due to COVID. We had 80,000 Victorians run up to the Gold Coast, Brisbane, Sunshine Coast very quickly, and would pay anything just to get a house, because to leave Melbourne with $1 million, you're living 60 k's away from the city, to go and live near water, to pay an extra 20, 30,000, who cares? You just do that.
Exactly.
So a lot of that, no one's seen a lot of the new entrants wouldn't have seen that yet. So I think one good thing about a little bit older, Mike, is that you get to see a few different markets, and we've experienced that, and we know that it will come again and go again, and that's why we try to buy smart and have that patience to run through some times where there just may be some consolidation in the market.
Well, a hell of a lot to unpack, and you've given plenty of gold today, Julian. So thank you very much for coming on the show.
Our pleasure. When you said to come on, I thought we were going to go up on one of your planes, but it's okay. I'm okay in front of a camera.
Next time,
that will be fun.
We'll get up in the skies. I have actually tried to record a podcast up there. The audio quality is not so great with the engine sort of whirring away, because it's not exactly private jet stuff that we're involved in. But we'll keep the podcast on the ground and the fun in the sky.
I haven't actually seen the MCG jet yet, but when it does come in, maybe I can get into one of those.
Yeah, it's in the post. All right, Julian. Thanks very much.
Thanks, Mike. Take care.